Analyzing the patterns that are occurring in the major indexes allows the candlestick investor to be much more aggressive, knowing what the high probability results are on the overall market trend. As we can see in the Dow, we've got what we call the classic pattern, a fry pan bottom, which creates a very strong price move. Then a pullback right back to the T line with a left-right combo starting the next uptrend, creating a J-hook pattern. What's the prerequisite for a J-hook pattern? A strong price move. This is why we call it the classic. Fry pan bottom, strong price move, profit taking J-hook. We know the magnitude of this move right here should be equivalent to the magnitude of this move. Knowing that and seeing that the indexes are trading well above the T line, that allows us to take advantage of the chart patterns immediately that are in situations where they're at a breakout level. Our recommendation on Riot, ROIT, was based upon witnessing what everybody else watches the formations. And notice how this formation was creating a wedge formation. And then we had a bullish flutter kicker, a very strong reversal signal, which told us we wanted to be buying immediately on positive trading for two reasons. One, it would be confirming this bullish flutter kicker, and two, it would tell us that they're breaking out of this level right here, the wedge formation. Now, did we expect it to be up 42% on the day? Definitely not. But we knew that if they opened it positive, breaking this wedge formation after a strong buy signal, the probabilities were pretty strong they were going to take it higher. Not every trade turns out to be a big, huge move. Fortunately, with candlestick analysis, though, it puts you in situations where the opportunities to be in a big price move are much more great in your favor. It also allows the candlestick investor to better assess what's happening in a price move that could create much greater profitability. A lot of people don't like to trade a price or in a stock that may have had this percentage move, but knowing what the candlestick signals tell you, it makes it much more comfortable to be trading these big price moves. Our recommendation on Mara also was based upon kind of a wedge formation and a doji sitting right on the T line. What do we know about a doji? It's going to move the next day or the next time frame will move in the direction of how they open it after a doji. If this started trading positive, we knew that they weren't going to breach the T line to the downside. And the fact that they kind of broke this downward wedge told us the probabilities were pretty strong they would be in an up move. Once again, were we expecting to have a 42% return in one day? Definitely not. But it still puts us in situations, the candlestick analysis puts us in situations where being in the right place at the right time is dramatically improved based upon candlestick analysis. That'll be it. We'll see you in the chat rooms.